right, we're going to get started. Thank you all for joining us today. I'm Matt Weber, Vice President on the Internet Equity Research Team here at Canaccord Genuity, and it's my pleasure to introduce Chris Innes, Chief Operating Officer of MNTN, a performance TV company that just recently completed an IPO on the New York Stock Exchange. So Chris, thanks so much for joining us today.
Thanks for having me. And you pronounced my name right too.
All right, I practice it a lot. So maybe just to start us off, just since some investors might be getting more familiar with your story, could you give us an overview of MNTN, the services you provide, and how you're differentiated in the ecosystem?
Yeah, so at MNTN, we provide brands with a platform that marries the storytelling of television with the performance and measurability of paid search and paid social. So we help brands like Build.com find new consumers, new visitors, and new purchases. Through our platform, they can use our targeting software to find those exact consumers. We have tools to help them build TV commercials and services, as well as be able to track the performance of every campaign all the way down to the order ID.
It's pretty comprehensive. So the company just recently reported its first quarter as a public company, Q2 results. They were strong. Could you maybe just walk us through some of the key highlights from the print?
Yeah, so a strong first quarter for us. We grew on performance TV 35% to $67.8 million. In terms of gross margin, improvements to 77% and adjusted EBIT at $14.5 million.
All right, that's impressive. And then so like one unique aspect of the MNTN business model is you're focused on SMBs.
Yep.
Can you talk a little bit about why this market segment is attractive, and then how should we think about the TAM here?
Yeah, it's a big market. If you look at Meta's business as an example, who's targeting very similar brands, they have 7 million advertisers in the United States. We think for us, 1.5 million brands are in the United States are potential customers of MNTN. We ended last year with just a few thousand, so we're at the very, very tip of the iceberg. If you look at those brands and if they can spend $30,000 to $40,000 a year in marketing, you apply that to us, that's $60 to $120 billion in terms of potential, a very, very big market.
That's pretty healthy. And then any color you can share on your vertical exposure as it stands?
Yeah, we don't have, first off, I'll say in terms of SMB, that represents, 92% of our revenue. We have a little bit of revenue from enterprise, 7 or 8%. In terms of the verticals we're strong on, it's really a wide bucket of any type of D2C brand. Mm-hmm. And so we've become larger lately in geo-local, the Orange Theories of the world, retail, e-commerce, you name it. It's a very, very wide range.
Got it. So let's dive into the performance TV platform a little bit more. One of the key principles of your platform is bringing search-based marketing principles to connected TV. Could you talk a little bit about what that means and the mount and match technology that underpins it?
Yeah, so to be a performance platform, you have to be able to drive return on ad spend and have a really good targeting engine, and that's what mount and matched, that's what that targeting system is. Mm-hmm. And so as you think about that system, we're acquiring a large bucket of retail media data. And so that is purchase habits, behaviors of individuals that we use to target on similar brands. Mm-hmm. All that data goes into a giant database, large language models, then break that into keywords. As a performance marketer, I would log into MNTN's platform. I would be suggested what keywords to use to target on a campaign. I can say yes or no to any of those keywords, and then I'm essentially shown how large the audience is, et cetera. And so it's a new way of targeting that makes it really, really easy on the marketer because they don't have to think about anything except for what keywords represent my business.
Mm-hmm. Do most marketers accept the keywords that you propose, or?
I would say that's a good question. I would say no one accepts it all at 100%. Mm-hmm. They're always making changes and adjustments, and that's also part of our AI philosophy. Mm-hmm. We're not trying to automate everything. We want the marketer to make decisions, to be involved, and so I'd say about 80% of marketers are making some type of adjustment, but they're using a mixture of the keywords we suggest and the keywords they want to add.
Got it. So then, if we think about the inventory you're serving ads across, Mountain focuses on what I believe you coined living room quality inventory.
Yes. Yeah.
Which, could you define that for us?
Yeah, so living room quality is the type of inventory that we target. It's 15 or 30-second TV commercials. These are unskippable and episodic. Episodic meaning, we're serving TV commercials where you'd normally, you're watching a TV program. We're not doing like cowboy westerns or anything like that. And typically this inventory is the inventory you would have found on cable a few years ago. We want it to be premium. We want it to be somewhere that most Americans they shape their living room around where they're watching that TV, but it's a very premium content.
Okay, and then how do you go about accessing that inventory? Is it mostly like direct deals or with it?
It is. We have more than 80% is direct deals with the TV networks themselves. This is NBC, Disney, on and on. We do work with some SSPs. They're more the middleman of you have to have an ad server involved, but most is direct to the TV network itself.
Okay, got it. And then are there any networks or publishers you don't currently have access to where you're looking to build a relationship?
Netflix is the only one. It's a combination of two things. They're still getting their tech together, and their pricing is a little on the high side, very much on the high side. But I think that'll be resolved by the end of the year.
Okay, that's good to hear. Is any inventory purchased up front, or is it all?
No,
okay.
we do no upfronts whatsoever, nor are we holding any inventory. We essentially, the entire system's about finding a specific consumer. And so we essentially will bid on that exact consumer in real time and serve that TV commercial, typically a few minutes after the bid.
Okay. So shifting gears here, another important part of this is attribution, of course, and there's obviously a lot of challenges in CTV. Could you walk us through your attribution model and sort of how it addresses some of those challenges that we've seen?
Yeah, in performance marketing, a lot of platforms use clicks. They track clicks. You can't click on a TV, so we built an attribution model for television. We call it verified visits. How verified visits works, we serve a streaming TV commercial into the home. We know the IP address, all the device IDs of that home. If we see a visit from another device in that home after the TV impression within a window of time defined by the brand, we'll count that as a visit. And then any corresponding conversion will count as well. It's human verified, and the advertiser can validate these conversions using our lift data or by validating the order ID itself.
What's the window of time?
It's typically set to whatever the sales cycle is of that brand. So if you're tshirts.com, that's an impulse buy. That's probably going to be a couple hours. If you were an automobile company, I would imagine you probably want to have that be a couple weeks.
Got it. That makes a lot of sense. Are there any areas of your attribution model that you're actively investing in or looking to bolster?
Partnerships.
Yeah.
And so, a lot of people purchase on Amazon, as example, kind of off-site, and we're working through integrating all those solutions.
Okay, got it. So switching gears a little bit to your creative capabilities, a few years ago, the company acquired Maximum Effort, a creative company that was founded by George Dewey and Ryan Reynolds. You recently sold that back to Ryan. Could you walk us through the strategic rationale for that transaction?
Yeah, so Max Effort for Mountain has never been about building TV commercials. It's been about leading our brand and really brand marketing. And so Ryan's team still does that, mainly driven by George. Really, the change we made was just on paper, as George and Ryan didn't want the scrutiny of working at a publicly traded company. But they're still providing all of our brand marketing. And so one big thing they do for us, we use our own product to grow our business. And so we take the email addresses of future customers, we upload that to our platform, and we put TV commercials of Mountain directly in the living rooms of performance marketers. And so those TV commercials will typically feature Ryan and his team. That drives a large wave of demand that powers our go-to-market. And that hasn't changed at all and will remain center to our go-to-market strategy.
Okay, good to know. And then could you just maybe, how should we think about like the creative capabilities that you provide more broadly, just given most of your advertisers haven't advertised on TV?
Yeah, so 97% of our customers have never been on TV prior. They need TV commercials. Now they all have video. These are marketers that are typically working on Instagram or Meta. And so we have two different paths we can help them with TV commercials. Both are through QuickFrame. So QuickFrame's a company we acquired a couple years ago. QuickFrame is a marketplace of content creators that can do voiceovers or a shoot or anything like that. So essentially we have that marketplace that is doing a lot of editing and building for the customer base. And then we have a set of AI tools within QuickFrame that we've been testing. It's essentially a Photoshop of building TV commercials, totally end to end. And our belief is that over time, the marketplace will continue to use our AI tools as really a performance marketer doesn't want to build a TV commercial. They'll automate that or outsource that to someone else. But the QuickFrame today is building TV commercials for a little bit over 60% of the customer base.
Oh, that's impressive. And you obviously don't have you have plenty of demand, but how should we think about the supply side of QuickFrame? Do you have enough?
Supply side? Absolutely. And I think the right now we have 5,600 content creators. We really don't have any challenges with supply, but I do think the AI tools will, will draw new supply. We'll be creating new jobs out of that. And I think at the same time, you can build a TV commercial much faster in QuickFrame AI than you can, using humans.
Right. Yeah, I was going to ask about that next. So, like, how has your video generation AI capabilities sort of changed over the last 6 months? I feel like in the last 3 months with Google's VO3, we've seen like a lot of momentum, even more so. So maybe
we've not done a full release yet. So we've built TV commercials for 811 brands so far. We're somewhere between 18 and 20,000 hours of video. We're really just working on refining and training makers on how to use the tool, et cetera.
Okay, got it. So shifting gears a little bit, if we think about your go-to-market framework, I believe Mountain recently lowered its minimum spend requirements, which has in part contributed to some of the robust active client growth you guys have been seeing. But also, I think Mark recently commented after, I should say for the broader audience, Mark is your co-founder and CEO. He said that there has been increasing interest from larger advertisers post going public. So how should we think about the optimal mix over time?
Yeah, I think for us, our core focus is the M of SMB, the mid-market brand. And I don't see that necessarily changing. I see the IPO's definitely drawn some larger mid-market brands, but that'll continue to be our focus. And as I mentioned before, 92-ish% of our revenue is SMB, and I think that's gonna remain somewhat the same. We will drive more S's over time, and we're kind of controlling that throttle, but I don't see immediate impacts to the business from it.
And then, as we think about, you have an expansive TAM already, as you outlined in the beginning, but as we think about the rise of more like solopreneurs and 1 to 5 person businesses, do you think like over time those people could become, or those companies could become your clients as well?
I think it's possible. As we look at the TAM of the 1.5 million businesses I was outlining prior, we never really thought about going lower than those businesses in terms of the S because of mainly creative. And with QuickFrame AI, it's totally possible that I could change that TAM and approach.
Are there any specific investments you need to make today to sort of continue to hone in on the M part of the SMB, or is it yeah?
The two main investments we're making in the business, one, marketing, as we're putting TV commercials in the living rooms of future customers. You've got to buy a TV commercial to essentially do that. The other investment we're making in the business is just engineering. We're almost at a place of 40% of the company being engineering, and that percentage will continue to grow as we focus on the product.
What about Salesforce? Are you growing your sales force?
Yes and no. We're not growing the sales force in terms of humans. We've not hired anyone in the sales force in the last 2 or 3 years. We've used both the max effort team to increase the inbound leads and demand, as well as AI. And so a big portion of our sales team now is totally automated from conversations, SDRs, reach out, et cetera. And so we'll continue to make some small investments there, but probably not in terms of human capital.
Got it. And then could you just maybe dive a little deeper on how you actually go about acquiring customers, given it's B2B?
Yeah. So I outlined it a little bit earlier, but we take the email addresses of future customers. We upload that to our product, which matches to their household. And then we take TV commercials of product demos, case studies, how to generate return on ad spend, and put those directly in the living rooms of marketers. That creates a wave of demand. Before we started doing that, 3% of our revenue, came from inbound leads. That number is now 77%. And so that's also how we've not had to increase headcount in the sales team. And so, and what's great about that is as we want to grow into new verticals like geolocal, et cetera, we just acquire those email addresses and start using our product.
That makes a lot of sense. I have a few questions on financials, but maybe I'll pause here to see if our audience has any questions. Looks like.
Just curious on the independent agency opportunity. Like, are they a potential customer for you over time?
Yes, absolutely. And so we think of those as performance agencies. There's 7,000 of them in the United States. We started a program in March of this year to basically do an agency partner program where these agencies, based on their media spend, they receive credits. Those credits, or mountain credits, can be used for a rev share or to receive a TV commercial. We have 150-ish agencies that we're working with. 42 have signed up and are part of the program and are essentially dedicated to selling mountain. So I think there's a lot of, we're just at the tip of the iceberg of that growth opportunity, but there's a lot of opportunity in the future there.
Anybody else?
Given your focus on SMBs, would that be a stretch to say that you essentially compete with Meta? And I guess related to that, so sort of how do you convince small businesses to give you like parts of their advertising budgets?
Yeah, so we do kind of compete with Meta to address that part of your topic. And what I mean by that is we're competing for budget to power return on ad spend. And so what a mountain customer will typically do is they will start off their first month taking budget from Meta. That they'll essentially balance both budgets side by side for a period of time. And at the beginning of the second year of their relationship, they'll create a new budget. But to answer your direct question, it's pretty easy to convince a performance marketer to try something. They're used to trials. And so performance marketers typically have a test budget laying around of $25,000 a month where they will try anything. And so there's not a lot of friction or like convincing. It's basically, here's the mountain platform, we can generate return on ad spend, here's a case study, and that brand will immediately try it.
Anybody else? All right, I think we can move on to financials. So you just guided to 23.5% year-over-year revenue growth in Q3, but that reflects a high single-digit impact from the maximum effort sale. So I believe performance TV implies performance TV growth of the low 30s. Could you just talk about some of the assumptions underpinning that outlook?
Yeah, so we've as you think about some of the assumptions pinning that, we are driving a lot of customers. Those customers are signing up. They're growing and expanding just as we expect them to. And we're at the tip of the iceberg in terms of our potential growth. 1.5 million brands and in our TAM and have a very positive outlook.
What does like the ramp in spend from a client typically look like?
Yeah, so typically a performance marketer will start off with a budget of $25K. Even with us lowering minimums, I think right now the average trial is about $28,000 a month. And they'll come out of that trial spending somewhere typically around 3x of what the trial was. And then from there, it's a 10-month period of they'll slowly increase, they'll look at the results, slowly increase, look at the results. And I say 10 months as that's just the average of what we're seeing in the customer base today.
So it sounds like the results speak for themselves.
Yeah, it's very much, these performance marketers are managing portfolios, and the portfolios are different performance platforms and return on ad spend. They're moving money around slowly based on the results they're getting, and they'll just continue to increase until they find that curve.
And then I know you haven't provided longer term targets, but how should we think about the growth trajectory of the business over, say, the next 3 to 5 years?
I go back to the TAM, and the TAM, the 1.5 million brands, and we're just on the tip of the iceberg. I think we have a lot of growth ahead of us.
Okay. And then if we're switching gears to margins, I believe you have long-term EBITDA margin targets of 35 to 40%. What are some of the key levers of operating leverage on that?
Well, number one is just really, really good execution and being having a lot of rigor and process around what we invest in, how we invest, and just keeping our costs where we need to. And Patrick and I partner, our CFO, partner very, very well together on that. And then I think on top of that, there's some movement we can make in gross margin, some stuff we're working on that goes into that as well.
Okay, makes a lot of sense. And then could you touch on your capital allocation philosophy?
Yeah, I mean, right now we're reinvesting back into the business, into engineering and marketing. But from a capital standpoint, I don't think we have any immediate things we're looking at.
Okay. So we have a few minutes left here, but is there anything we didn't cover today? Anything that you think investors might not fully understand or grasp about your platform, the opportunity? Anything that you'd like to?
We get asked quite often a lot about the trade desk and how we're different essentially from the trade desk, and we do not compete with the trade desk at all. And in fact, we track our sales opportunities, and that never comes up. The trade desk is focused on reach and frequency campaigns at very, very large brands. We're focused on driving conversions for SMBs across America.
Are there any other platforms outside of Meta that you would say you compete with?
I definitely Google. If thinking about most of our brands will take budget from Meta to start on our platform, Google is number 2 behind that. And we don't compete with Amazon yet, but I have to imagine sometime in the future they'll invest more in CTV, and they'll could potentially become a competitor.
Looks like we have another question.
I just wanted to ask, you mentioned AI in terms of content creation, but are there other areas where you're seeing efficiency from AI?
Well, targeting is a massive one. So Mountain Matched, our targeting engine, leverages AI. It's a keywords-based system. And as we rolled that out within the last year, and for that segment of customers that adopted it immediately, they raised their budgets by somewhere around the 40% range. And so that's made a very, very big impact. We have a recommendation system that also is powered by AI in the product, as well as the creative tools. And then just, I mentioned, but from an operational standpoint, our teams use AI a lot to automate tasks and really keeps our people investment low.
The targeting gains, can those continue to compound, or is it sort of like you get a lot of gain and then it's hard to?
It's now on the targeting side, it's more about data acquisition than anything, and acquiring retail media data, the Walmarts, the Roundels of the world, et cetera, and more niche data for niche verticals and businesses.
Inventory onto the platform, and it sounds like you sound pretty positive around that. Would that be a growth driver for your business, or do you feel like you are not limited by supply at any point?
It's a good question. I don't think today we're not really limited by supply. I think Netflix would just look good on a logo slide and good in our UI. But for all of those consumers, we can target and find outside of Netflix. we're reaching 131 million households a month. But I think maybe over time, if I hear Netflix is going to create custom ad units, maybe that could be a growth driver. But I think our own business, targeting and attribution and what we're doing are bigger growth drivers than anything that could be.
Got it. Thank you.
Looks like we have just. Oops, sorry. Go ahead.
Yeah, with your SMB focus, do you measure gross and net retention and CAC?
We do. I don't have the numbers off the top of my mind, but I'll say on the S, it's not much different than the M. And we are, on a net retention basis, we're seeing stronger performance from our smaller customers than we are mid-market.
All right. It looks like maybe I'll ask one more just because we have about a minute left here. But any specific advertiser trends by vertical that you'd like to call out for the remainder of the year? Anything that as we think about tariffs potentially impacting prices in the back half of the year? Anything that you're seeing?
I think the main thing I'm seeing right now is more adoption of segmented TV commercials. The old way of linear television, a Super Bowl ad as an example, everyone sees the exact same TV commercial. There's no variations of that. We're seeing businesses like Build.com, they're running 36 unique TV commercials to 36 unique audiences. That's never happened in TV before. You typically see that in social with Meta and a lot of their A/B testing tools. And so that's a big trend that we're super excited about. And with QuickFrame AI can help power more of the creation of those TV commercials.
Makes a lot of sense.
Yeah.
I think we're just at about time. Thanks, Chris. Great discussion.
Awesome. Thank you.
Thank you.
Yeah.